So our story shows that the Bank of Canada has put out a risk report that shows that high ratio loans, meaning little money is put down, under 20% of a home's cost. These loans are spreading across Metro Vancouver pretty rapidly over the past 3 years, and also the proportion of debt compared to the buyer's incomes is rising at the same time. So the Bank of Canada sees multiple risk factors in terms of the riskiness of the loans that are being pushed out across Metro Vancouver, really to keep pace with these skyrocketing home prices. So the Bank of Canada has said that with the tighter lending standards enforced on the big 6 banks basically last fall, late 2016, with these standards, you look at all the high ratio loans, the big loans that have been extended in Vancouver and Toronto for the past 3 years, and these loans won't be issued anymore under the tighter lending standards because they can't be insured, they're too risky. So what has happened is that something called shadow banking appears to have risen to fill the void of these loans. And the problem with shadow banks is that they're seen to be looser on lending standards, they're vulnerable to money laundering issues, and they're quite vulnerable to some of the mortgage fraud issues that we saw prominently in the US subprime real estate crisis. Our investigation showed that mortgage fraud complaints are rising in BC in correlation to shadow banking. What's happening in a lot of these cases is mortgage brokers are inflating the incomes of prospective borrowers. They're altering Canadian Revenue Agency documents. They're altering banking documents to make it look simply like the borrowers have more money than they do. And in some cases we found that so-called ghost collateral, which is a very serious issue in the Chinese banking system, is also showing up in BC banking. What happens there is assets that are faked in China are used to back mortgages in British Columbia, which leads to a lot of fraud and corruption concerns in our real estate market.